Let's shift to the big stock that dominated the mind space and is going to do that today, Jet Airways, and the deal struck yesterday with the banks. Sonia, what has been the opinion from brokers?
Okay, well, the general market feedback is that the plan is a setback for minority shareholders because for 1 rupee, the lenders have got almost 11.5 crore shares of Jet, and there's no reduction in the debt or liability, and the value of the retail shareholding has been cut by half. Edelweiss says that an infusion of 1,500 crores immediately will help support Jet for the next few weeks. Equity dilution is a value destructor for existing investors, but the fact that the government will bring in some investor to run Jet in the next few months is something that will keep the stock afloat perhaps. Citi says that the restructuring provides immediate support to Jet's operations. Jet could regain some lost market share, which is a positive. It's negative for Interglobe given the resumption in supply from key competitors like Jet. But on that note, in fact, let's get Jal Irani of Edelweiss Financial Services to tell us how to approach the stock and this whole deal. Jal, hi, good morning. Thanks for joining us. What did you make of the deal and how do you approach the stock now?
So I think, firstly, this paves the way for potentially a new buyer coming into a company which has got slightly less complications, with the single largest holder being the lenders, and clearly they want to sell the company. So that at least is one significant impediment out of the way. Now the question is, at what value and who would be interested. I think, firstly, the other thing, in my opinion, is that in whatever shape and form Jet survives, I don't think that it's going to be a carrier with, what was it, about 124, 126 planes at its peak. And I think it's going to, at the most, survive in a much smaller form. So, therefore, anybody buying the company will have to look at it from that perspective. And also now the interested parties, if you recall a few months back, were really very few, if at all. Has things changed dramatically since then? Are there going to be significantly greater interested parties? I don't think so. So I don't think everybody is going to be tripping over each other to buy it. But I think it's also going to be a question of what price does that one look at buying the company at. So I think the new promoters of Jet Airways will have to look at the price more realistically, rather than just sort of an unrealistic price to sell it at. So I think bottom line is that things have the path has been paved a bit, but it's not going to be necessarily very easy for the sale to happen.
Okay, Jal, I take your point that equity is doubled, and my sense is that some debt will be written off by the bankers, because I don't think they realistically expect, at least this is source-based info, but I don't think they will expect the entire 8,500 crore to become sustainable debt. So whoever comes in is going to take a little bit of a haircut, or nobody will come in. Now, given that, at what price will you buy? Will you buy it at 150? Will you buy it at 200? Will you buy it at the current 250? What are you all recommending?
Well, firstly, at this price, we're not recommending anybody to buy the shares. So that is very clear. Now, what price does a strategic buyer actually find value at? It is very difficult to say. But first things first, just a clarification. If you look at the press release, it says that 11.4 crore equity shares of the company have been given to the lenders at ₹1 of the outstanding debt. So at the moment, it seems that there isn't any talk about writing off the debt. Will that happen at a later stage? Fairly likely. But at the moment, essentially, all it means is the number of shares has doubled. And if you think of it like a 1:1 bonus, typically when your number of shares doubles, the stock price halves. So one shouldn't be looking at, whatever the price at the moment is, 260 odd, but effectively half the price, basically. Okay. So that is that one thing, if what the press note says is accurate and there's no more to it, then that is actually the case.
Okay, Jal, we'll leave it at that. Thank you so much for joining us and giving us your quick take. In fact, that's the view that Prakash Diwan has as well.
There's a bit of a difference, Sonia, here. Look, you can't take 254 as the price and say, okay, it should be half of that. There's a reason the stock trades at 254. The reason for, I mean, if you pull out a 2-year chart of the stock, I know the equity is going to increase. If you see the stock, it was 644 just about 12 months ago, and before that it was somewhere around 800 as well. It was trading at 200, 220 because the market was pricing in the worst case scenario. So to straight away say that it should be the half of the last traded price is not the right way to approach the stock. Now the stock can do anything. My sense is today the stock should have a big rally. That's the point, because it was out of F&O ban as well, and there are still some shorts. Yes, yesterday it rallied 12%, and that's because a lot of people in the know would have wanted to buy it ahead of the event. That would have happened. But just to dismiss it as it's not going to work like a copybook stuff.
Yeah,
it's different.
There's a bigger issue at play, right?
Exactly.
I mean, it's a big airline that's not going to shut down.
There was an airline which was going to shut down all of a sudden. There was no revenue, nothing happening. All of a sudden, there's fresh lease of life. Now we'll figure out whether that works or not. 1 month from here. Right now, what the screen is going to tell you is that perhaps it's going to react to
the hope trade.
And that's why I frankly believe that just to say that okay, the equity is going to double, so that's why the stock should be half. 254, I mean, is not the reference point in that case to look at the stock. That's the limited point.
Prakash, you want to comment on that? I mean, finally, at least the airline won't shut down.
Yeah.
And there'll be a new investor coming in. Operations may resume. You think that's enough to buy the stock, or is the risk reward not favorable currently?
Buying into the stock would only mean that you would have to quickly book some profits once a little bit of that hope trade gives you that momentum. And there's still this short covering that resumed in the last half an hour of yesterday's trade, which could continue and could give you that fillip. But there's going to be so much of news flow that will impact this stock, this counter. The names of the investors who come in, the kind of conditionalities that they bring in, the kind of buyout price that Etihad wants to negotiate on. And all of this is going to happen in the next 60 days. So it's going to be phenomenally complex in terms of this. So every day you'll have a buying and selling. This is going to be a trader's delight for the next few months.
And we don't know whether the reward or the risk is favorable.
Yeah, but you could buy on dips to leverage the upside, because hypothetically it will probably be a good saving grace of sorts for the airline to go. We are talking about Indigo losing market share suddenly. Why would that happen? Because Jet has the wherewithal to start competing and hit the ground running. So yeah, it's going to be interesting, but I would buy it closer to 230, 240.
We have to take a mandatory break. We are back in a jiffy. We'll have the pre-opening rates.